You're listening to the Perth Property Show, Australia's only weekly property podcast by West Australian experts for West Australian listeners. Catch your latest episode every Monday at 7 a.m.
Good morning, everyone. Welcome to the Perth Property Show. My name's Trent Fleskens, your host. As always, we're hitting the grassroots today, talking with one of my favourite buyers agents in Western Australia, the number one principal place of residence owner-occupied buyers agent in Perth, in my opinion, in 2025 Western Australia. It is Rowen Powell, Director at Verve Buyers Agency. How you going, mate?
Yeah, good, mate. Thanks for having me.
Not many people, I reckon, would have heard much of Verve, but they should have heard of you and the business you've been working in for a while now. Performance is brother company or sister company to Verve, and it used to be called BuyerX, didn't it?
Yeah, so BuyerX used to be a part of the company of Performance Property, and then over time we've created Verve, so we've rebranded and relaunched that just for the WA market in particular.
Sounds like a really nice champagne, to be honest.
It does, mate. So it took a little bit of time to come up with a bit of the name behind it, but obviously it sparks a bit of enthusiasm as well.
We've never had a conversation on this podcast before about buying for owner-occupiers. My background, buying for developers. We've chatted to Lockie Delahunty before about buying passive properties, rentals that obviously you want to see growth in over time in the market, but I tip my hat off to you, Rowen. Buying for owner-occupiers sounds like the most frustrating, tedious thing you could be doing in property in WA. How do you do it?
It's being as patient as you possibly can, knowing that the right property might not come up for 3-4 months, depending on their circumstances, and especially in this market. You really need to be patient, but also understanding of why they're buying.
I guess when you're buying for an investor, it's pretty obvious what the parameters are here. Buy me something that fits a certain price point, obviously, but you can demonstrate has value growth, and there might be some sort of uplift opportunity in renovation or subdivision aside from that too. And often we really just want to see rental yield. Am I going to be able to see a rental return out of this property at some point, and some capital growth too? But when you're buying for an owner-occupier, it's what colour's the house? What street's it on? What's the neighbour look like? How big's the house? How tall are the ceilings? The list could go on for 1,000 things, obviously, right?
Yeah, 100%. And you got to remember, they're not just buying it for a 5-year cycle. It's a 10, 20, 30-year period.
There's emotion involved.
Lots of emotion. They're raising their kids. They're, depending what ages they start, and then they factor in, are they also potentially going to downsize from that property? Is the master bedroom downstairs, long-term aspects? So there's all these things that you need to consider when you're dealing with home buyers.
And I guess the way that you report on this property, the way that you justify the purchase might be a bit different as well. We're not focused on a rental yield, are we? They're more intangible things. How do you justify a purchase and convince a buyer that outside of the tangibles that make it a home, this is a good deal in the first place?
It's understanding their needs is the biggest one. If they've got their must-haves and the non-negotiables, so it's trying to work through that. And like you said, it can be like the school catchments, it can be certain pockets, it could be the natural light. The list goes on forever, to be honest. It's about trying to reframe that and get an understanding of what is achievable as well, because everyone's got a wish list. But if you're trying to buy a $3 million fully renovated house in Dalkeith, you're out of the market.
You'd like to think that you could be that answer, and buyers agents like to say, hey, we've got an army on the ground, we can buy it quicker than you, we can save you money simply by buying it now rather than 7 months from now. But I bet you've got a bunch of clients that are so picky that it actually does take 6 months, 12 months just for that property to even come up and exist.
Yeah, well, in particular at the moment there's a huge push towards modern builds, right? And we haven't built enough over time. So I've got a couple of clients looking in West Leederville where they want something that's probably outside the price range that hasn't been built yet. So you're constantly following that up, and that could take 6 to 12 months for the product to even exist.
Yeah, I think that's something that requires that patience and also a bit of faith and confidence, but then that relationship management, because I assume I pay a retainer, we're on board, I'm excited for the first month, and then it starts to drag 2, 3, 4 months. And that's not to say that Rowen isn't working really hard. It's possibly just to say that, hey, what I'm after right now, as you said, doesn't exist or is really hard to find, or we're having to dig deep to get into an off-market opportunity that I never would have being on market.
Yeah, it's just providing transparency. So that's probably what the market's lacking at the moment. And if you're a home buyer trying to find that dream 4x2, if I can provide this is what's coming up in the market or what this is selling for, where the offers are, and creating a bit more transparency, even if it does take a bit further time, you're confident in the decision you're making, whereas just due to the sheer lack of stock, you don't know what else is out there, and you're forever going, is this achievable? Whereas if I can present comparable properties that are coming up, it builds up confidence, and that's what's lacking.
Now, I've said I don't envy you in this position, and I reckon a lot of people who are sales agents wouldn't envy you. You could just be a sales agent, Rowen, work just as hard, probably make double the money, have to do half the service, have to provide half the service to your clients, make wins without even really doing much on the weekend. Just offers come in. Why do you do it?
Just being able to help people in particular. Just seeing that when you can find a family that's been looking in Wembley for 2 years and you can find that dream property that they didn't know existed, and they refer you on to friends, and it's a feel-good feeling, and you have a genuine connection and relationship with this client long term. That's what fuels it for me in particular, and it's a very much a necessity in this market where people need help.
You're right. I think that's a big part of it, is if you're actually altruistic enough to want to help people and not just be along for the ride, it is a game, I think, that can be very fulfilling. You think about a lot of sales agents that I've met, even high quality sales agents that are number one in their area. A lot of them aren't actually experts in property, they're experts in selling. But I think to be a buyer's agent, you really need to be an expert in the property you're buying. You have to understand what you're buying, because if you don't, not only are you not going to be very good at your job, you're also going to leave yourself quite open to putting people in properties that have a whole bunch of skeletons in the closet.
Correct. And you need to be an expert in your area. Obviously, what we focus on at Verve is local expertise. I need to know the market better than anybody else, better than any agent, better than any buyer that's coming in. Because if they're leveraging my knowledge and expertise to get in, I need to know more than them.
Yeah, well, you're right. That's the competitive advantage. Let's talk to the market. Let's get nitty-gritty and anecdotal about what you are buying, what your clients want to be buying, even if they can't at the moment. What does that last 12 months look like? Let's say a year ago, what were you buying? How were the dynamics at the time? Through to the end of last year, where there was a bit of buyer fatigue, I think, and into now, we've just seen a rate drop. We're expecting a couple more, hopefully, and expectations are very powerful when it comes to behaviours. 2025 is an exciting year for Perth in the property space, and I think for the buying space in that owner-occupied area, especially higher end, there's a lot of opportunities that are opening up that haven't been opened up since probably 2021.
Yeah, I think that's spot on in regards to the 2021 comments. Probably if we go back 12 months, there was a bit of FOMO still left in the market at the start of the year, and people were pretty much trying to snap up location, knowing that the prices were running away. So they wanted to be in the school zones, catchment areas, good locations were the prominent feature. And then over time, when things started to change and the sting came out, and you've hit the nail on the head with buyer fatigue, that was a real thing. People's sentiment towards things that needed work or the in-between type of stocks. You've got the finished, the renovated, and then you've got the land value that you're going to knock over and build. I found that the stock that came up was a lot of that in-between type of property that sat on the market, because people, first and foremost, they don't want to pay for it to knock it down, and second of all, they don't want to renovate a dysfunctional floor plan. So it just simmers there, and then the lack of that sting of the FOMO, people weren't like, it's been on the market for 3 weeks, there's got to be something wrong with it. And that was the sentiment that people were starting to carry towards the start of this year as well. And obviously with the rate reduction as well, it hasn't interfered too much with the buyers that I deal with, because for them, it's when you're spending upwards of $2, $3, $4 million, it's got to be the right product. And I was finding that you might have $3 million and there's a $2.5 million product, and the $3 million buyer is like, I'm not going down $500,000 because it doesn't make sense to me. And then the $2 million buyer doesn't have the capacity to go up. So it's that a lot of the in-between stock is still occurring.
Yeah, it's interesting that your experience reflects the broader market experience as well, in terms of that progression from FOMO to fatigue and now into 2025, recognising the rate drop stuff, but I guess less sensitive for you. I would have thought that you'd have a whole bunch of clients that are about my age, in their 30s, maybe they've got a kid, maybe they've got the Australian sheepdog, and they're reaching, whether they have a property now or they don't, trying to get into that Wembley, that West Leederville, that Mount Hawthorn, that North Perth, and for a little bit of time now, they've always been a couple of $100,000 behind, hoping that now with these rate drops, they can go back to their broker and say, hey, can I get up to that 1.7 mil now? Are you having any of those conversations yet?
Yeah, it's really dependent on, obviously, people of that age as well have bought something originally. So then they're trying to maximise the equity in their home, or the sale cost of that would be. That is probably the major demographic that is trying to buy at the moment. The people are trying to upgrade for whatever reason.
They're stretching as well.
They're stretching massively. But then what they're stretching to, the price point isn't quite reflecting of what it could have been maybe 6 months ago. So it's a difficult conversation to be having. They're saying even though you've saved up a significant amount of money and rates have come down, you could be buying an inferior asset.
Because you're already behind the 8 ball. It's moved in that time already.
Correct, especially those competitive price points.
It's chasing the tail at the moment, isn't it?
Yeah, 100%.
Well, how's the dynamics been? I assume obviously buyers will pay what they have to and what they can for the right product, especially in that western suburbs market. They're not dummies. They'll act when they see value. But you said it's gone from obviously FOMO on the buyer's side to a bit more pragmatism, limited obviously by affordability as well. But on the selling side, when you're stepping up at the negotiation table, whether it's off market or whether there's an agent involved or not, are you finding that sellers are realistic about where the prices are right now? And obviously you'll be biased as a buyer. Is it often a case where we think we've been quite generous about what we're offering, but a seller's still 10% out of the market and good luck to them?
Yeah, there is an imbalance between buyer value and seller's expectations. The hardest thing is if you're picking up a paper and you're reading it's going up by 2% each month and maybe the medium house price in that area is 2 to 3 mil, it's not quite as aggressive in these areas, but they're thinking it is. So then you could have a property that could be advertised for high 2s, but really the buyers say at 2.6, 2.7, but the seller's at 2.9, and there's never going to be a deal done there because they will never come down off that price point. So that's what I'm starting to see, is there is an imbalance between sellers' expectations. For sometimes the reason is that they need to go buy something and what they're trying to buy is on their flip side more expensive, so that therefore their house has to be more expensive. And it's what they can potentially trade in and get. And that's the problem in the market at the moment, is that, and buyers are very savvy at the moment. You've got to remember the buyers that are still in, if they haven't bought for the last 4 years, like first and foremost, they've seen the market go, and you're getting new buyers come in and they're replicating the feedback and the confidence that these old buyers have. People are more realistic and understanding, like, no, that's sold for 2.7. I know where the market is, and they're very determined because obviously, like you said, the affordability, the cost of living, all these things have crept in and they're very considerate, and it's got to be that property for 10, 20, 30 years.
Was it easier to buy a year ago?
Yes, it was. I reckon at the start of the year, people's expectations were probably more aligned of where the market was going, and sellers were as well. Even if it moved by 2%, buyers could see that with the number of transactions. It's definitely decreased number of transactions. I think in Florida alone this month, there's only been 3 houses that have come onto the market. So if there's not enough transactions, there's not enough real-time data for buyers to see that, okay, the market's moving. Whereas if it's stagnant and you're seeing things that were listed in December and haven't sold, your expectations of the market have changed.
If 5 more properties came on the market today and they were reasonably priced, could you buy all 5?
Me personally, as a representing clients, potentially if they match their brief and their requirements, yes.
So it's not a demand issue. It's not like people have stopped wanting to buy a property or wanting to meet the market on the demand side. It's the case that, again, friction is starting to come back into the market. It's interesting, isn't it? A year ago, we were complaining there just wasn't enough options for people to buy, but FOMO was so hot at that point in time that people were just buying stuff that otherwise wouldn't have bought. I think the buying side was compromising. And then we started to go through the end of last year where a bit more options arbitrarily came to the market and buyers started to go, hang on a second, I'm not a mug. I'm not going to keep doing this forever. Prices gone up 25% in the last 12 months. And now I think we're back at that point again. Colleen Gandini, who you would have dealt with in Applecross, said a couple of years ago, the issue is not that there aren't enough buyers in Applecross. The issue is there's 4 houses that are remotely worth buying right now in Applecross, which is why you don't see the transactions. I assume what you're facing across a number of suburbs.
Correct. That's 100% spot on.
Do you think people aren't putting their property to market because they have future expectations of growth or because they have nowhere to go?
Nowhere to go. For example, I went through one off market at the start of the week, and when I first went through it was 4 mil, and by the end of it was 4.9.
Why?
Just because they were trying to buy something else, and then they were trying, the trading just kept getting further and further away.
Okay.
And value's only around 4. So you start to factor that in. But spot on about properties worthwhile to buy. For example, a property just came up in Wembley, a 4x2 character, renovated, always a mid-2, really like highly desired type of asset in the Wembley school zone. 10 offers, was appraised 2.4, sell for 2.7s. It was 10 offers. So there are buyers there, but that's 100% spot on. It's trying to find that asset that is actually the appropriate one to buy.
Yeah, so the market's paying for the good stuff, but you throw up some mediocre stuff in a good area, the market's not going to be silly about it.
Correct.
That's interesting, and it's the one thing that's changed in this market, because obviously interest rates are only just having an impact, is we've gone from having 3,900 properties on the market to 5,000 properties on the market. Still so undersupplied for a broader market, but just enough for buyers to go, hang on a second, And I wonder if that's what it is, or if it's just the price point where people are starting to think, this is mental, man. 3 years ago when I was looking at this, what properties like this and not making a call then, it was 1.7. Now it's 2.7. I just don't accept that.
And it's also the fact that the stock that is coming on from that 3,800 to the 5,000s is compromised assets.
Yeah.
So there's a lot of junk that's on the market at the moment. And the reason why people aren't jumping at it is because they've got the same mindset. If you go through, there's a lot on main roads, potentially stuff that's compromised. There's the streets all selling and you start questioning why. And if you're an uneducated buyer, you can clue that on pretty quickly. And if there's enough risk involved, they're not going to jump all over it.
The election's coming up, state and federal, which is fantastic. We don't see that very often, obviously. How do you think that will impact the dynamics with regards to your clientele pulling the trigger versus properties coming on the market versus seller accepting pricing? It's always a weird time. The last time that I always hark back to 2019, March 2019 was the month that Bill Shorten was bandying about his capital gains tax and negative gearing reforms and lost the unlosable election. It was also arbitrarily, empirically with regards to the data, the worst month in Perth's property market history. It's where we had the most properties on the market, the lowest amount of transactions ever per capita. You do see how the fear-mongering, the noise in the media, I don't think it turns people away from property, but it creates a level of stasis where people are apprehensive to make decisions for a period of time. Are you expecting that?
Yeah, it doesn't turn people off, I think, but it doesn't turn people on at the same stage. It creates a bit of a stalemate, and that's what we've already got in the market in regards to people trying to buy, to sell, to buy, whatever, trying to make the market move. We're in a stalemate. Everyone's treading water, and I can feel that in this first quarter of this year. People, yes, the interest rates provide a bit of reprieve for potential confidence. The more you read, the more an understanding that there's still potential for it to go. But then there's so many people that are probably misaligned of what is going to happen in the next few months, and it's easier for them to sit on their hands, especially if you've got the budget and capacity. I'm willing to wait because for me, I want to buy that right property at 4 mil. I want to buy it at 2 mil. If I'm spending probably the biggest financial asset I'm going to buy for my family, it needs to be right. And I need to be confident in it. I
would suggest to anyone listening today, whether you're going to employ a buyer's agent or not, this is a fantastic opportunity. If you have some levels about you, don't be that mug sitting on your hands in the stalemate. This is the time where you sneak in when everyone's at the pub to buy that property, that family home. That period in March, April, where it's really going to start getting noisy and fearful in the media and everyone's worried about what's going on with policies that half of us aren't even bothered about. And usually that's when you start making a call. Personally, I went and bought a very large investment for a family home at the time, the same month in March 2019 in Nedlands at the time. And looking back, people would have been like, it's a horrible time at the time to buy. No one was buying. Trent, that property was on the market for 3 weeks and no one was coming through. And you look back now and you think that was a fantastic time because that's exactly buy when no one else is buying. And it's just for a month, but a great opportunity.
100%. And it's the Warren Buffett quote. And you go, be greedy when others are fearful and be fearful when others are greedy.
Yeah.
And at the moment, you can definitely see that. There's a lot of fear. But then once something sells, people go, wow, that actually probably undersold. I should have bought that. And that's where people get caught up in that vicious cycle of, I should have bought something.
What are your buyers after at the moment? Obviously, family home's an easy way to say it, but can you characterise generally a median home about what people who employ a buyer's agent in your area are looking for? What's the best way to put it?
Prerequisite?
As in what's the sort of the trifecta here? If you could tick every box, what would everyone love to be buying right now?
Something that is the first and foremost location. So something that's not compromised functionality.
How would you characterise location? Give me some specifics.
So potential like city view, for example, like city beach, ocean views, not close to main roads, limiting noise, catchment areas. Because if you're looking to build something, for example, in city beach and you're getting ocean views and you're in Kapanara precincts, you've got a long-term play there. No matter what you build, you're potentially going to get the return back without overcapitalising, potentially. Functionality is a big one. Obviously, with the cost of living and interest rates, as the older kids are staying in homes, they need to have that diversification throughout the home, like a 4x3, 5x3, multiple living areas is pretty common. And also a lot of people are working significant amounts, are busy professionals, so they want something that's finished, essentially, whether that's a character home, 1900, 1940s, or just something recently built and built well in particular. It's probably, if you had a blank checklist, it'd be, location, functionality and finishings and quality.
When you talk about finishings, would you say that more people prefer a contemporary home that's a couple of years old, or more people go after the Federation style, or is that really location specific?
It's determined by location there. So like in Wembley, everyone wants a 4x2 character home because that's the demographic of that asset class. Whereas if you start going City Beach, you're either buying a beach shack or a 1990s mansion or a brand new build or land value. And then you start to go Floriette, and Floriette's probably gentrifying in regards to the types of assets and the more modern. Dalkeith, we had a conversation before about its land value, or there's no in between at the moment, and no one wants to buy a 1990s old home that probably needs about $1 million spent on it.
Yeah, that's an interesting chat there, because I want to segue into the dynamics of the suburbs that you are buying in. And obviously a lot of them are western suburbs, they're high value. People who have money can afford a buyer's agent, see the value in investing into a buyer's agent in the first place. All those reasons, and I would suggest everyone should be thinking about it, but certainly the people who act on it are the people who can afford the more expensive homes most of the time. How's the ladder looking right now in those areas of where you think offers the best value, the best amenity? If you could have a leaderboard nearly of your top 5 suburbs, it doesn't have to be western suburbs, just anywhere. It could be Mount Laurel, it could be Applecross, anywhere of these beautiful suburbs in Perth. What would you say is your top 5 of where, if most people had the money, they should be wanting to buy, in your opinion?
In my opinion, I think Floriette's up there for the pure sake that Wembley's land value versus Floriette's getting comparable, and Floriette's a superior suburb. That's one significantly. Mount Hawthorn showing good potential as well. They just had a sale there for 3.1, and then Sweep House just sold just below mid-3s as well, so that's pushing the ceiling of that. In particular, probably other suburbs I'd start to look at your city beaches, like that ocean play, depending what you wanted to do, that coastal lifestyle, saying good value through there. In particular as well, Mozzie Park, Peppy Grove, they're pretty undervalued at the moment.
It's hard to say. Peppy Grove undervalued.
Yeah, or in considering like what other things are transacting for on the other side of the train line, you're getting still proximity to the river and 1,000 square metres for $4 million, $5 million, $6 million, depending. Then you go over to Cottesloe and you're spending that on a 400, 500 square metre block with no ocean views. So it's that lifestyle appeal, and I think people will start gravitating towards back to that river precinct because it's more family orientated as well.
Talk about river. Do enough people recognise the value in places like Adderall, Rossmoyne, Shelley? These are some beautiful suburbs in Perth that I don't think get enough of Mount Pleasant enough attention.
I think Adderall is. I think there's a bit of a flow on from Applecross. Like you look at the pricing of Ardros, it was the highest moving suburb last year. People are flowing in from that to get to the school zone at Applecross Senior. Rossmoyne's very good for the schooling. Mount Pleasant's an interesting one. You've got a lot of developments occurring through there, so that's changing that landscape of that market. Still, you have some premier homes on your Baldwins and these types of streets. But I still think there's always a gravitation towards there. It's just the fact that people are probably being pushed there, not because they want to, but because they have to for budgeting reasons.
Got ya. Are you seeing a lot of subject to sale become part of the conversation, and was it as prevalent a year ago?
100% at that top end, subject to sale is really occurring. It wasn't prevalent because obviously the FOMO and how quickly transactions were occurring, was now you've got a little bit more time, and sales agents actually prefer being a bit more transparent instead of maybe potentially hiding
a fake finance clause or something.
Correct. Yeah, they prefer being transparent because they get burnt, and then buyers are really quickly to move. If something falls through, everyone thinks straight away there's something wrong with it, not the fact that someone hit the finance and the sub sale within one. I'm starting to say that.
Sellers more accepting of it?
Yeah, 100%. I'm starting to say that.
Because a year ago you'd say don't even bother bringing me a subject sale, mate.
Yeah, and it's also like the currency in the market. Like if you're a sub sale, there's another house there to list as well. So that does offer some currency for sales agents in particular. Not that you leverage that, but it does come into it in a low stock market. Yeah, it's a reality.
A lot of these properties you're buying, they're obviously properties that have been lived in for a while. Families are looking to close a chapter, move on, and we know for a few years now that there's been a lot of friction and a lack of mobility in the downsizer space. And I reckon a lot of these houses are people who are about to downsize or want to downsize and haven't moved because they haven't really had many options. Are we still expecting to provide pretty much an open book of flexibility as a buyer for sellers when we're putting our offer in? Say, hey, here's a price. If we can agree on price, I pretty much just have to let you have as much time as you need to find a place to go. Is that the reality for a lot of offers, or is it a little bit less accommodative?
There's a lot of properties off market where they have to be flexible, because in order for them to get them to move, you've got to give them a rent back long settlement. Predominantly the properties that are coming onto market, they've bought somewhere, they're motivated, they need to sell. So I'm seeing that there are a lot more floating off market, but you need to be able to give them the flexibility, to give them confidence to buy something. That's the biggest hurdle at the moment.
A lot of buyers agents, they flex that they buy most of their houses off market, and obviously there's value in that. People come to a buyer's agent for their ability to access things that they believe they can't access themselves. Why pay a buyer's agent to buy something I could just rock up to the home open for? Often would be the thought process. But if you could think about your last 10 purchases, how many of them would have been off market versus on market, and what's that dynamic look like? Is it nearly a waste of time as a buyer's agent going on market, given you're trying to demonstrate you're offering some value, or is it just part of the game right now? Anything and everything you'll put an offer into if it matches a profile?
You've got to match the market in particular. So lately, probably about 70% of my transactions have been off market.
Which is lower than what I think it would have been in the past.
Yeah, 100%, because you've got to understand that the market expectations of that seller, just because a buyer's agent can push off market doesn't mean it's good value. And that's where you really need to be a local expert in that area. So if you're seeing every property that's coming up pre-market, off market, on market, you can determine value pretty quickly compared to the general public. Or even agents themselves, they might only appraise one or two, but there's 6 properties in that area that no one knows about. You can leverage those. So when stuff comes up off market, sometimes I can just be asking for an absolute bomb and it's not worth it. And if you're not specialised in that area, that buyer's agent could push it to tell you to buy it because it looks good in their books and they can promote it, but that's not the way it needs to work. It's where do I see value? Does this match your brief? How long are you living here for? Is it 20, 30 years? Is this the right property? How many properties have we seen beforehand?
And I guess the on-market value is that, yes, it is on-market, but we should be able to demonstrate a relationship with that selling agent who we can provide a level of confidence to, trust to, that, hey, if this is an offer, it's done. It's a done deal. It's those relationships, but also just the ability to recognise where value is and where it isn't, because I think there's just as much of a service in not buying a property for someone as well.
100%. I tell people not to buy stuff all the time. I recently just told someone this morning because it's a potentially could be compromised in 5-10 years. So you've really got to hang your hat on your reputation. But when you're buying on market as well, it's even just being a soundboard for understanding what they're trying to chase and what they're trying to achieve. Because when you first meet them in their initial consult, they might tell me it's a 4x2 and they don't want to pull, and this one's got a pull. And you've got to talk through them like, hey, look, this is what you mentioned to me. This doesn't match what you're after. But it's also having those relationships with the agent so they understand how I work, and you'll be able to separate yourself from everybody else. You're not just a buyer that's there and done. You're a buyer there for long term because you've been represented well.
Last question. I give you an open checkbook today. Cash. Spend it on whatever you want. It's a residential owner-occupied property that has to service you, Rowen Powell, for the next 20 years. Obviously, at the age you're at, looking at the life that you're looking to enjoy for the next 20 years. Open checkbook, anywhere in Perth Metro. What are you buying? Where is it? What do you think you'll have to pay for it?
Good question. I think I'd be looking near Bayview Terrace, Mozzie Park, River Views. You're not paying the price of a Peppermint Grove price tag, but you're still getting a value add opportunity there. I think that's what I'd be buying. Something where I can hold for a period of time and knock down and build.
So a family home?
Family home.
What are you paying for a family home on Bayview Terrace?
Well, there's one coming up. It'll be around 6.
Okay, there you go. I was going to give you 10, Rowan. Mate, thank you very much for your time today. I think every listener here will enjoy peering into the life of a high-end buyer's agent in Western Australia. A very hardworking one, and clearly a very informative and honest one as well. And that's what we want from our professionals in property, guys, is people who are going to tell it how it is and tell you exactly what it is as well. And that often is in contrast to a lot of sharks and posers that enter a market in hot times like it is in WA right now. Rowen Powell, Director at Verve Buyers Agency, thank you very much for coming in, mate.
Thanks for having me, Trent.
Thank you for listening to another episode of the Perth Property Show. If you've only just joined the conversation, you can catch up by heading over to our website, perthpropertyshow.com.au, subscribing to the podcast, or joining our Facebook page. Don't forget to tune in next Monday at 7 a.m. for more expert insights, local analysis, and suburb spotlights. Happy hunting!